Welcome back, fellow speculators, to the Speculator's Edge, where super performance begins and opportunities await. I'm your host, Berg. So today I'm going to show you how you can achieve super performance and make some serious money with stocks SAVA, Opnt, Vntr, and ZM. I'm going to go over the charts on a technical theme and a fundamental theme. If you haven't already, please subscribe. You can click on the TSC logo in the bottom right hand corner of this video. Leave me a comment, ask if you have any questions, please ask. I'll be more than happy to help. Also like the video, and I want to thank you for your support again. Before we move on, this video is for educational purposes only, so do your due diligence before venturing off into stocks. It's your duty to take responsibility for your own actions, and these stocks that I'm going to be going over, they're not recommendations, so keep that in mind. Any buying that you do is on you, okay? So what we're going to do, let's go ahead and dive in because time is money. We're going to go ahead and start off with SAVA. So what we're looking for in this chart here, we're looking for the prior trend. We got a prior trend of greater than 25%. We are in the cyclical stage 2 uptrend, the accumulation phase. As you can tell, we have heavy demand coming in on each run from each base. We have a primary base here, and we have the secondary base forming here, okay? And within this secondary base, we have a rounding bottom. This is the rounding bottom pattern here. What we look for next is price, what's going on with price. We do have low volatility. This is a nice contractional period here for several months. And yeah, the price from high to low, 117.54 to 31.44 isn't so great, but the thing about this is it does hold around this 50-day moving average and the 150-day moving average, and that's something that we're looking for. That's something that we want to see, because when we do have a bounce off those moving averages like that, it does represent institutional buying or demand, at least within that stock. So the next thing, what we look for, we're looking for price to put in work, what I call work. And that's practically that buying off of these moving averages, okay? And we want to see demand within off those moving averages, okay? That's putting in work. As you can see, it kind of makes these lows here and forms kind of this double bottom right here, with the resistance being at around $48.91. But other than that, we are pretty close to 52-week highs. That's another good thing. That's another thing that we look for with price, where it's at in relation to the 52-week highs. Also volume, we look for a decrease in volume within the base of this pattern, or within the base. And we do have a lot of volume. We have a huge volume decrease. As you can see, it stays below this 50-day moving average. The average of the volume. And another thing here is we do have a ton of volume dry up right here on this pullback right here, and of course the stock releases and starts running up on this right side. Now what we do have is increase in volume while the stock does, or the price does, put in work. So we do have heavy demand here and heavy demand here on today. Our super pivot is going to be at 62.50, which was breached today, and it was breached actually a few days ago as well on good demand, but it does pull back a little bit, but it is breaking out again today. What we want to see is that hold that $62.50 level before buying. I'd like to wait until the close of the day just to get just to see how that stock is the action, if it's actually keeping healthy. So sometimes you do want to buy early during the day, because you can catch a lot of momentum within the stock and actually get a larger profit in relation to your risk, okay? So other than that, like I said, this isn't a recommendation to buy. Just pay attention to this stock here. It looks really well. This is a high alpha name. The performance of this stock has been great towards its counters, towards its peers. So in the S&P 500 and the NASDAQ, This stock is in the healthcare sector and in the pharmaceutical industry. So let's move on to Opnt, which is Opnt Pharmaceuticals. This one is in the healthcare as well sector and the pharmaceutical industries as well. Okay, so we look for the prior trend, which is greater than 25% from low to high. We do have a stage 2 uptrend, shorter term moving averages being above the longer term averages, and with decent demand, okay, pushing this stock up. Okay, so next thing that we look for, since we have the stage 2 accumulation, we look for the base and the pattern. Well, this is a primary base right here, so this is the first base of this stock, and we do put in a rounding bottom pattern. Okay, this is a rounding bottom. Now we look for price. We do have low volatility within the rounding bottom or within the pattern. So what else we're looking for? Does the price put in some work here? And it does. Of course, there is buying off of this 20-day moving average, which is good, and there is heavy demand on each time, so that's great news to see. And not only that, the price is near 52-week highs, which is great because that's at $14.97. Hopefully we can push past and move up to that point. Okay, so next thing is volume. Do we have a decrease in volume? Yes, we do within this base, within this pattern. And not only that, we do, the volume does increase while this stock is putting in work, and we are having a decent accumulation day or buying day, demand day with this stock. The super pivot was breached at $13.75, was right here. Like I said, wait until that close above that $13.75, or wait until the end of the session, closer to the end of the session, to see how the stock is acting. Hopefully it holds that $13.75. Right now it's at $13.65, so hopefully it'll hold that level, and if it does, then that's a pretty good indication we got some more room to run. Next one we got is Venator Materials, VNTR, which is in the materials sector and commodity chemicals industry. Okay, so prior trend was greater than 25% from low to high. We are in a stage 2 uptrend accumulation phase. The base and the pattern, we are in the primary base, so this is the first base for this stock, which is good. Okay, it's just like Opnt. What the pattern is we have several different patterns, and this is the beauty of the market when you're observing technical analysis or charts. It really depends on your observation. You can see multiple things. We do see different, we do perceive differently, but it is an art and it is a discipline, and this is more the artwork within trading with technical analysis. And what we do have is we have what's called a flat base. Could be a flat base right here, so you have resistance all right here, and we have support down here at around 375, resistance around 350 or 550. Okay, it could be a cup with handle right here, the cup being right here, the handle being right here. It might be a double bottom, which would be right here with a handle right here, or an ascending triangle. The ascending triangle meaning that the support or the lows, it performs higher lows onto the right of the chart. So it is forming higher lows, that is your support, and then the top part would be resistance, which would be the flat part right here. So it is touched multiple times. So the next thing that we're looking for is price, low volatility. There is a low volatility, nice price contraction within the handle. And not only that, the price, each time it dips right here on the 50-day moving average, we do have buying, we do have demand coming in, as you can see right here. That's good indication that we do have some institutional buying demand within that. And also we are near 52-week highs, 52-week highs being around that $5.48 level or $5.50 level. Okay. Next thing, volume decreases within the base. We have tons of volume dry up right here, and you can see price, how that reacts, because volume is the fuel that moves the price. And as you see volume slack off, of course price should be correlating with that, and that's a good sign. as well. We do have, like I said, volume dry up again in multiple areas, but we are reaching out of the super pivot, and we are reaching out of the super pivot at $5.20 on high volume today. This is good indication that we could move past those 52-week highs. This is an IPO stock. This stock, I think, IPO'd back 4 years ago, something like that. So being the primary base with this stock could have lots of room to run. So just be prepared and be on point, and just manage your risk appropriately and position size appropriately, okay? When you enter in on this stock, on any stock, when you're trading, that's the key, is risk management and position sizing, okay? I do have on my website, on my Patreon website, I do have my risk management and position sizing technique. Whenever you subscribe to one of my tiers, you will receive that education, okay? So there is a video and PowerPoint that goes with that. Next one that we're going to look at, I didn't annotate this chart because this is a little bit different. This is kind of the buying low concept, okay? So I will annotate a little bit of it and tell you what's going on. This is Zoom video communications. It is in the technology sector and computer services industry, okay? Technology has been really strong this week. Really great rotation into it money-wise, also into healthcare. So it's pretty good to swim in right now or to be fishing in. So what I like about this here, this is my concept of buying low. So how I look at this is this stock is in a downtrend right here, but it is breaking past this downtrend, and how you draw your downtrend line is you start with the left side of the chart, okay, and you find the highest peak, and then you draw your line down to the sequencing peaks, okay, the ones that follow the peaks that follow down, okay. So each one that follows down, the higher ones like this right here, this is where you draw your chin, okay. This will be your resistance line for a downtrend, okay. And there is also what's called a trend channel. You can take that as to where you put your resistance line and kind of match it like that with the lows of this stock, okay, as it kind of touches, makes, keeps going down. But other than that, this is breaking the resistance level here today, and we do have the 150-day moving average above the 200-day moving average. Excuse me. So that's a really good sign right there that we're still in that stage 2 accumulation phase. What we are forming here is kind of like a rounding bottom, and this is more of a what would be, let me see here, this would be let's see, we got primary, so secondary, third. This is more of a fourth stage base. That is more reason to be a little cautious with this stock, but the thing about this is that it does surpass a lot of resistance within this bottoming phase. So this stock, Zoom, is actually putting in work and is acting really well right here. Not only that, we do have a lot of volume that decreases right here within this nice tight range and this low volatility point. But other than that, we do have some decent demand coming back in here. So it does soak up all this supply right here today. So this stock could possibly keep getting a move on. It could get a move on even higher, maybe up to 440, 450 level, somewhere around there. But this could be the next moonshot phase, because stocks do reset their bases. The base count is usually around 5, but it can reset within that 4th to 5th base, and if it does reset, then it can have another leg up and another run and create new bases, okay. So that's the beauty of being understanding the cycles and base counting within the market, okay, because it's a cycle. Everything runs on a cycle. We all run on a cycle. and that's just how it works. So understanding the cyclicality of stocks is something very important that can actually change your financial future for the long run. I mean, it can change it. So, but other than that, we're going to go ahead and dive into the fundamentals of these stocks. We're going to start off with SAVA here, and SAVA is, the composite rating is 48. This one is ranked number 58 within its peers, within its competitors. Not so great. It develops abuse deterrent forms of pain management drugs to treat severe chronic pain. But other than that, it's in the industry group rank is 116, which is okay. It's not great, but still, it's you want a better industry, be in a better industry. But I think the pharmaceuticals are increasing within the industry group rank. So other than that, the group relative strength rating is a C. Didn't have very great earnings. The earnings per share rating is not great. Other than that, the sales, I mean, it's not really showing any sales, but it did have consecutive years of annual earnings per share growth, has been 4. That's good. So 4 years of consecutive annual earnings per share growth. That's really good to see. Okay, we do have a huge percent change in funds owning the stock, which was 40%. The accumulation distribution rating is an A+, and we do have 1 quarter of increasing fund ownership. So we do know that there are funds buying this stock, institutions buying this stock, and they are increasing on that. That's good. Also, there is something else. Citigroup or management owns 13.7% of the shares for this company as well, so that's good to see. Management is kind of putting their money where their mouth is, so they've kind of got some what do you call it, confidence within their company. Okay, so that's good to see. So the next one that we're going to look at is Opnt, and again, the fundamentals of this stock not so great. But when you're looking, what you really want to look at is you really want to look at price action. Technical analysis should be incorporated with your analysis. Even if you think you're fundamental, I still believe that the technicals will help, because I'm going to tell you right now, I've always been technical, but I also introduced the fundamental side, and the fundamental side does really help me, okay, because it tells me the institutions are swimming in that, okay, in that stock. It can tell me that. But other than that, Opnt, the composite rating is a 49, and it is ranked 54 out of its peers, or out of its competitors. It develops pharmacological treatments for substance use, addictive, and eating disorders, okay. Like I said, this industry is 116 out of 197. The group relative strength rating is a C. Not so great on the earnings, as you can tell. Earnings aren't all that great, but it does have a 1 quarter of earnings per share acceleration. That's okay. The sales has actually been really good. So sales percent change last quarter was 49%, with the 3-year sales growth rate being at 33%. That is excellent. It's great to see. That's what we want to see. We want to see their sales increasing, okay, quarter to quarter, not only that, yearly, because that means that they're selling their product. Their product is working, and they're able to sell it. So people, there is demand, okay. The accumulation distribution rating is an A-. That's good, but we don't really have a percent change in funds owning the stock, nor quarters of increasing fund ownership, but there is accumulation within this stock, okay, at this time. The next one that we're going to look at, Vntr. I know that the chemical sector has been great. Commodities have been great. So before a couple of months ago, there was a lot of rotation. Actually, for the past several months, there has been a lot of rotation into more of the commodities, commodity-based stocks such as aluminum, steel, some gold, silver, stuff like that, oil and gas. So it is a rotational market, and still is to a degree. Of course, it's always rotating. Money is always rotating. This is ranked 52 in the composite rating. It's not even ranked towards its peers or its competitors, but it makes chemical products that improve the quality of life for consumers and promote a sustainable future. Okay, well, that's good to hear. The industry group rank is 81 out of 197, which is good. Group relative strength rating is a B-. That's great. The earnings, not so great here. The sales, not so great. But the accumulation distribution rating, A- is good. The percent change in funds of owning the stock has been 3%, which is okay, not bad. So 3% change in funds owning the stock with 2 quarters of increasing fund ownership. So we do know there is accumulation and that we do have funds or institutions buying this stock. So that's a good thing to see on that. Also, let me see, I think it's either Opnt or it might be Vntr that has a huge, yeah, it's Opnt. Opnt, I want to point this out, management owns 30%, 30.88% of the shares. That's really good. So they're pretty confident about their company. So that's a good thing to see. You want to see management putting their money where their mouth is, or where their company is, because then they do believe in their company, and that's how that works with that. So other than that, let's move on to Zoom. This is one of the other reasons why I wanted to point this one out, is because the fundamentals of this stock are absolutely impressive, super impressive. Matter of fact, we're going to tell you a little something. I heard Mr. Mark Minervini on a webinar one time with IBD. He said it was so difficult for him during the crisis, during the COVID crisis, that or pandemic, that he tried to schedule Zoom to get a Zoom conference going, and when he called, he said he couldn't even get on the line with them. That's how busy they were. So that told him that they're really making some sales. They're making some money. They're profiting big time. Okay. And of course they have been, just due to the fact of the pandemic. Okay. So, but the composite rating is 65. It is ranked number 25 out of its competitors. It offers cloud-based software platform for video and audio conferencing, chat, and online collaboration. The industry group rank purely sucks. This is a laggard industry. It's 180 out of 197, 197 being your lowest industry. Okay, your group relative strength rating is a D. It's not so great. But earnings per share rating is 99. The percent change last quarter was 560%. The last 3 quarters average earnings per share growth has been 757%. That is serious business right there. Okay, that's intense. The 3 years earnings per share growth rate has been 606%. This stock could be like PayPal. Okay, it could just keep moving like that. Like I said, that could be in a huge base reset right now, and you could possibly latch onto the next meet of this stock, the next run, the next huge run. Okay. Also, it does have 3 years of consecutive annual earnings per share growth, and not only that, look at the sales. Sales is 191% change last quarter. The 3-year sales growth rate is 160%. With the annual pre-tax margin at 37.8%, they're keeping a ton of money. They're making large profits. They're doing excellent. Annual return on equity, 42.4%. I mean, these guys are making money hand over fist. These guys have been doing this, and insane. I watched this stock when it IPO'd, not when it very first IPO'd, but I caught it on my proprietary scan. And matter of fact, where I saw this stock, and I'll bring that up. Let me go 2 years. Where I saw this come out was right here on the 3rd of February 2020, and this thing just took off. I mean, look at that. If you were buying, let's say, from the super pivot breakout at 75.84, let's say, or even at around $78, I mean, look at this run. 600, nearly 650% within how many, with 180 days, Yeah, that's insane. And this, like I said, could be the next move that could be ready to blast off and move higher, even towards those, even towards that $588 level. I wouldn't be surprised, to be honest with you. Don't know that, but the markets are unpredictable. And if you walk in there with a big head, with an ego, get ready to get it chopped off, because yeah, when you think you're right, you're wrong. Okay, and that's the way it works. The markets will make you humble, extremely humble, and they are not forgiving. This is a battle. This is war. You have to be prepared mentally, physically, emotionally, spiritually, everything. Okay, this is intense. Yeah, it's intense. People lose their lives because of this stuff. That's how intense it is. So we do have an accumulation distribution rating of B. That's good. Percent change in funds owning the stock is 11% right here, and 7 quarters of increase in fund ownership. I mean, you can't beat that. It's insane. That's awesome. So other than that, those are the stocks for the day. I want to, before I end this video, I want to thank you for watching this video and supporting TSE, and myself as well. I hope you found the material informative and you enjoyed it. Please subscribe if you haven't already. Drop a comment and let me know what you think of it. If you have any questions, I'll be more than happy to help. I'm here. Also, I posted a link down below to my Patreon site. You can go and check it out. I have several different tiers that offer great stuff. I mean, I offer an exclusive stock list, and this exclusive stock list is based on my proprietary scans that I've been, or a scan that I've been working on and developing for several years, and it's top of the line. I mean, it catches the best of the best every day, and you'll realize that there's just opportunity every day. So you don't have to be in a hurry, you don't have to rush. You can be extremely selective and pick the best of the best, and that's what it gives you. Okay, if you haven't already, check out my intro video too here on YouTube. I want to go ahead and thank you again for watching and supporting TSE. Here at TSE, we trade in the present, we study the past for knowledge, and we follow the process of trading to build our future. So thank you again, and opportunities await, my friends.